Hey guys, DJ from PTA. Gonna go over September 8th. Had two runners, Pixy, RIVN. Both stocks I end up playing. This was a pretty solid day. For me, I don't trade every day. I try to trade when I see trends. I try to trade when I see some potential or if I have time because I do. I would consider myself a part time trader with managing the site and helping everything go and training new traders. Just really don't have the time to trade as much as I would like, but I do see opportunities, and when I do see something great, I definitely want to take advantage of it. Now, PIXY was a very interesting trade, massive amount of volume based on the share float. Thinkorswim had the share float at 513 as far as shares outstanding, 513,000. So there was bound to be some type of rip or some type of accumulation or play. So for a lot of people I've read about in the forums and just talking to different people, they were very frustrated with this particular stock just because it had pretty much churned everybody and just gathered them up before they took it higher. But again, when you trade and you know what you're looking for, you wait for that right setup and then you get in at the right moment. So going back to this, let's break this down to a 5 minute. One of the things I want to show you on the daily was this key, excuse me, this key area here of previous month high. Now this was previous week high. This is previous month high. These were the key areas looking at the chart. I also had this area here right around 3470s. But I was really paying attention to previous month high because that was the area that I was most interested in seeing what it would do. Now, another key thing is looking at your support. So when you look at support here on this particular play, you have to respect it about 1930s. 19 to 1930 was the key area. So now if we zoom this in into a 5 minute, it starts to look like that 1930 is a support. And it was. It played support for the majority of the day. So most people were trading or accumulating around this area. As you can see, there was some high volume kicking this way when it got close to it. You see it was some volume that kicked in there. So it wasn't until later part of the day that the stock actually turned. And again, that's when you come down to timing. Uh, Trading is all about timing and being there at the right moment. One of the things I like to do is pay attention to what time of the day that the stock actually moved. The type of day, the time of the day is what's more important on the stock. So we normally get our first rush in the morning, which will be around at 9:30 Eastern Standard Time. You're either gonna get some type of reversal on the upside or on the downside, and then you pretty much hit some price action. If the stock don't really move at the 10:45, 10:30, it pretty much goes sideways. You may get a pop like you did here around 12, but that was just to entice everyone that was still sitting at the stock or still sitting there from out the day. One of the things I noticed is that anytime after about, I would say about 1:30 is when you should really get back to the desk and start looking at it. That's typically the time that most of the Wall Street traders are stepping in. The algos kick back in. Everything in between here is just like arithmetic trading. Bunch of algo, bunch of machines. You're trading against machines. When the actual physical traders step in, that's when you start to get these very nice patterns that step up so they can actually step the stock higher. So in this particular stock, we had a entry on this one at 2281. So let me draw that for you. That was my entry on that one, 2281. Put this as green. So this 2281 area is where I was looking at. You can really draw in on the 1 minute and see it there. Once it had confirmed, my higher time frames were looking good. So once everything was there, I jumped in right here with a risk back here. I mean, it was about a 40 cent, 50 cent risk, and then it literally just ripped. and it ripped high. I end up getting out before close because I don't particularly like to carry shares overnight. It's just one of my things. I just don't do it. If I do it, it's usually something for a long term trade or swing. I usually try to get in and out, take the meat of the move as much as I can, and then I move on. My exit was at 30.10. So I end up releasing my shares at 30.10. So let's go here and put that at 10. Put that at we'll just put that purple for the target. So right there into the close, literally a couple minutes before the close, when I saw this rip, I just got out. I was gonna sell some shares here, but we got this quick rip here. So I figured it may go higher, but I didn't want to hold it overnight. And yeah, I probably missed out on, let's see, $3 move. But I mean, I had already collected $7. So realistically, I mean, it wasn't a bad trade. In hindsight, I probably could have held, but I was happy that I executed trade, came to the table, got what I needed, and I was patient with it to let it unwind and actually capitalize on a pretty good move. Really, really good move on PIXY. But I understand that most people got chopped out of it. And if you have to draw out to the higher time frames to really see the chop. And this is right here where things were just not there yet. Even though you've seen this big jump, it wasn't there. That's what pulling out to the higher time frames kind of show you. You would have to wait for that second move. You had to wait for that higher lows. So when I didn't see that coming in, that's what made me say, okay, this thing's not ready. So once we had formed this red candle here, started looking at it, and that's when you got a different type of move. So it's multiple time frames, looking at multiple situations and scenarios, paying attention to the time. This is how you take advantage of types of trades like this. Again, this was a late day trade. I mean, we literally got in this up into the last hour or so, and I just knew that this stock was going to move just because of the flow, just because of how it was behaving, the amount of volume it had. It had rotated its flow something insane. So no, it was only a matter of time for that stock had to go higher and push higher into the close. So a phenomenal trade all the way around if you were able to take advantage of it. So the next stock I'm gonna go over is RIVN. RIVN was one that I ended up trading. I did pretty good on it. I did okay on it. I was more in particularly looking at the stock based on this pattern. It was still making these higher lows, so I was waiting for the day that it was going to squeeze. Let's break that down into a 5-minute. Now, looking at the 5-minute, you had this massive blow off first thing in the morning. So then it kind of popped and then fell, popped and then fell. For me, I was looking at it right around this 35. I think it was 35.91 was my order fill. Excuse me. Looking at while we were looking at the order fill for it. Yep. Excuse me. 35.95. So I ended up getting in at 35.95 on this one. Right there. Decent entry. I had a risk down in here, which was about 40 cents, and then it just rocked and rolled. Again, a type of trader. I don't necessarily hold stuff overnight. The stock was moving slow. The float was insane. I mean, the float was 960 million shares, so I wasn't expecting some gigantic move, but the pattern don't lie. The pattern was there, so I took advantage. This pattern here got me in. I end up snagging about about 79 cents, 80 cents on the move. So decent move. It ended up going its range. So, for the most part, it did a decent number on the range. I wasn't looking for anything significant or particular, but the chart was there, the pattern was there, so I took a snag at it. So looking at this, again, 35.95 was the entry, and my exit was 36.74. So here to here into the close, I got out of it and kept going. So that's one of those things where, in hindsight, probably could have held overnight, probably could have made a better move or something along those lines. But honestly, when you're profitable and it's a solid trade and it's a solid day, you take your winnings. And that's something that a lot of traders don't do. They just don't take their winnings. They want to be greedy. They want to hold on to the stock for dear life. And then they end up turning a winner into a loser. So the biggest thing you want to do is when you can take profit, take profit. Let the stock ride out with the rest. But if you know where you're getting in and out at, if you know where your support and resistance is, if it slams into a resistance, then get out. If it is holding support, then hold on. The reality is there should be some type of confirmation you are using, not based on feelings, not based on dollar amount. It should be solely based on price action or something that is being hit. Some type of price target is being hit. Some type of time of the day is being hit. There's trades that as soon as it gets to this time of the day, I get out just because historically I know the stock is either going to go against me at that time. That's whether I'm going long or short. So keep that in mind. Keep those parameters there so that you can know exactly what you're looking for when you get in the trade, so you don't have any hesitation. It helps with your confidence and it helps with your trade. All right, gang. If you have any questions, concerns, leave it in the comment section. Make sure you hit that like button, subscribe, and hit that notification bell so you don't miss any of these videos. And as I tell all old traders and new, stay studying and stay focused.